There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We're going to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar here with Scott Red Dog Redler, ready to answer your questions live. And markets hit all-time highs again. Scott, how was your day today?
My day could have been a little bit better. You would have thought, I had like 6-7 positions coming in that it would have been a little bit easier, but it just like the way the market's been going, not every position is created equal. And just because you're long a lot of positions doesn't mean that you're knocking the ball over the fence. I would say yesterday, I'm sure a lot of traders out there got those phone calls, right? You got the phone calls saying, oh, Jimmy or John or whatever your name is, market's at all-time highs. You must be killing it. You must be ready to retire. And I truly think that this is probably one of the most underappreciated rallies that's gone on. And I don't even think people want it to go on because people aren't positioned the way they'd like to be. There are some people who are riding it out long-term in their 401k, their 529. There are guys that are trying to have a portfolio approach like me that are trying to look at relative strength, get in strong stocks, not trying to have short in the brain. But overall, it hasn't been the easiest rally to deal with, and this last leg of it has been somewhat tricky.
Yeah, we get a lot of questions about that. I think a lot of people out there have that question. How do you navigate this market? And we even have one from Interlake here who just says, how do I trade a market at all-time highs?
Well, we weren't at all-time highs 4 days ago. So I talk about pivots. I talk about, what could you know from the charts versus what people say or what the headlines are. And everyone who's a trader kind of knows that last Friday, after seeing some technical weakness, we had that jobs report. I think we added less than 100,000 jobs. We opened down, but what did we do? We opened down into a prior support area. And we all knew that 1538 to 1542 is a level that held. So if you go to the chart, you will see that was the Friday jobs report right there. Okay, everyone was already starting to put their predictions that we were going to correct 5%, 10%. What happened? We held prior support. This was also a prior pivot. So after that, what do? We rallied back up. So anybody who was figuring that we could, short a rally or the bears are going to have control, right here was really your clue saying, guys, we shouldn't have taken back half of this wide range bar that happened, on that Wednesday. So right there, that was one of your clues to cover some shorts, look for some longs. We were talking about restaurant stocks in here, retail stocks in here. And then if you were short, you could have saved yourself some money right here, right? 1573, the prior pivot. Yesterday, that was your spot to cover, and that was your spot to add for a breakout. Now we're, 2 days in, we hit as high as what? 1597. So there have been a lot of decision spots, even just in 2013 versus, going all the way back, on macro charts. But at this point, here is one decision point of 1474. That's what led this move. We had this little accelerated trend line that we broke down, but we held. Same thing goes again, held. And now let's see how much work we do above 1573 and see if we could hold, above today's low and then keep measuring it. And there's been just so much rotation that every time it feels like, we might come in that some group is diverging, the money's not leaving the market, it's just going to a different part of it. So I would say, how do you trade a market at all-time highs? Pretty carefully, without just short on the brain. And just trying to stick with the portfolio approach. And if you're a little worried, just keep your size down so you're involved and you're not just looking for a cute short or just looking for a pull-in. And there's enough going on in all these different sectors with all these different chart patterns that it really doesn't matter what the market does on a macro sense. There's action across the board in all these diverse sectors.
Well, you mentioned clues and indicators, and before we had this 4-day rally, last week we talked about how weakness in the transports could have been a signal that the market would head lower. And we have a question from Bella here who says, what are your thoughts on the IYT not getting above 110? Is this a potential sign the market might be heading lower?
everyone keeps looking for these signs on why we can't continue or why the market's going to head lower, and that's what's been a little tricky. And I would say at every one of these inflection type points, there's been different leadership. So every time the leadership goes somewhere else, everyone's like, oh, this happens to be a top. And during the move in I would say the beginning of the year through January, the transports led the way. So if you look right here at the transports, you'll see, let's go back to the start of the year. The start of the year happened to be right around here. So this did lead us to highs first way through. And then what happened? We topped out here. Remember this small accelerated trend line that we drew that broke to the downside? Okay, but then we held, and actually this one got a little wishy-washy too, but anyway, wound up holding over here. This was Friday's Red Dog reversal. A lot of people on Twitter said, oh, is this a Red Dog reversal? I'm like, yes. I didn't go long this, but it was good for a bounce type play, and yes, we have the spiders at highs, and you have the transports making a potentially lower high. Does that mean that the rally is off? I don't think so. I just think that now retail, that was really quiet, that wasn't leading the way, is now at highs. Okay, you have other groups. You also have, I think, the financials still that led the way before, at highs. You have, just groups across the board, whether it's pharmaceuticals, just with that group, it needs more time. So right now, the transport's not confirming new highs doesn't mean that the market's going to fall apart. It just means that that group might need more time, and it's come a hell of a long way.
Well, let's talk some of the financials because we do have a big day tomorrow with JP Morgan, Wells Fargo reporting earnings. We have one from Rock M saying, how did you play the bank earnings for tomorrow morning?
I'm flat. I don't think that there's a tight setup for JP Morgan or Wells Fargo, and I'm not a macro fan of either of them. I'm still in my Bank of America. Okay, that's how I've been playing the bank rally, and I've been trading Goldman here and there and JP Morgan here and there. But for me, if you look at JP Morgan tomorrow, there's a decent setup. It's not on the dead highs, so it's not like expecting a major report. It's also not, back at the lows where all it needs to be is in line to rally. It's kind of middle ground. So for me, this is like a B play. I'll wait to see what happens. If it's a decent report, it opens up. Maybe I'll trade it versus this high here. If it's a bad report and it opens lower, maybe I'll see if I could buy it here. Same thing with Wells Fargo. It too, not at highs. Not that doesn't mean that it's game over. It means that people are a little worried to see what's going to happen with these earnings. They can't just mark up their loans or whatever when they mark down all their loans for their mortgages. They just can't change that to make earnings. They want real earnings here. So right now it's a stone throw away from the highs. If you're an investor in JP Morgan and an investor in Wells Fargo, I think you're fine. I think at some point they will be higher than they are now, and hopefully you're just trading around it. For me, sometimes I do take a call spread if I am weighted in one direction, but right now I'm kind of indifferent at both of those. And with Bank of America, I kind of feel like I've been riding this thing and I've been trading it, using a tier system during this entire run. This was the last time I had that core trade at 995. Then you had this bull flag, nice continuation move, and then this is when this accelerated trend line broke to the downside and created a new channel. Here's the bottom end of the channel. We did try and have a breakout here. I remember selling some into strength, and then I was here talking about buying it at the 50-day. At this particular point, this is also smack in the middle. So if JP Morgan and Wells are bad, maybe I'll buy a little bit more here. If they're good, we'll see what happens if it could break this minor intermediate pivot. So I'm comfortable staying in Bank of America even if it comes down because I'm not full boat Bank of America. I'm in tier 1. And then once, if it clears above this 1240 and can hold above it, maybe I'll get into more and then we'll see how it handles the highs here. So at this point, I'm kind of indifferent and I'll just trade around it based on the price action. They're not trading as if they're expecting blockbuster reports, so it's just a B trade.
Sin here was actually asking if Bank of America was a sell before Wells Fargo earnings.
I wouldn't be tier 3 Bank of America into Wells Fargo. I think tier 1. I think a swing trade. There's no particular setup here. Your setup was, various times along the way, you go back to Bank of America, okay? This was your setup. This was your core. This was your add-on trade. This was your get out of some if you trade accelerated trends. And then this was your get back in. This was your get out of some. And then I did buy some back into here, okay, but I just got the bounce. So now I'm back to what I'm feel comfortable with because I still think on a weekly chart, Bank of America still has room this year to at least, this $14 area, if not higher. So for me, I'm not that worried about it. I'm not trying to overtrade it, but there's no real trading setup now. The trading setup happened when it came in and reclaimed the 50-day, and you've already seen a little bit of a bounce off that.
All right, and lots of talk, of course, right now about the Facebook phone. What are your thoughts on Facebook right now?
Facebook, I'm a friend again. There you go.
You were friended.
I was friended. At the start of the year, we put in our 2013 thesis with Bank of America that I liked the chart pattern and it could get to 31.32. It went there in the first 3 weeks. So I remember I got out of Facebook very well. I sold into the excitement of the event. Even on earnings, I wasn't in there, and then I kind of got chopped up during the corrective move that happened 2 months after that. So now you look at the chart of Facebook real quick, you will see that I see a nice macro pattern here that's been taking time to build. Here is that cup and a pretty big handle that just started to break to the upside and show some commitment. So I think I got back involved this around 26.5, and I'm still long it. And I do think, that the highs of the year that I've said many times, that everyone keeps beating me up on it, are not in. First time I looked at this head and shoulders, this cup and handle pattern was right here. Okay, and it wasn't really built yet. Sometimes these things take a long time to be built. It hasn't been public for that long, but it wound up being a bigger pattern. Okay, and a few things. I do think that, I was excited, which nobody really talked about, how they got approval to have news disseminated through social outlets if it's approved. Right. I thought that would be a revenue source. We talked about the gifting thing. I think that could be a revenue source. I think their new feed is pretty cool, and I think the app for a phone could be helpful. So they're working hard to monetize their massive user base. So at this point, technically it's acting a little bit better for itself. I wouldn't be in tier 2 or tier 3. I was in probably tier 2 when I tried to go positive today because it opened up negative, and now I'm back to tier 1. I'm going to sit in it, and hopefully it continues to act better than it was acting a month ago.
Well, let's transition to Google, being as Facebook's phone is going to be on the Android system. Google's earnings are coming out next Thursday, and Trader RL here is asking your thoughts on the stock. He thinks that 50-day will be resistance.
Could be. Google has had almost, like they say, stealth rallies. It's had a stealth decline. About a month ago, everyone was saying $1,000 price target, $1,000 price target, and that was after about a $200 or 200-point move. So now I know some guys in my community, including me, have been trying to, find a little bit of support here. If you look at the chart of Google, you will see that, it put in a prior pivot, a little bit like a red dog reversal, but not extreme. And then you had a little bit of a move off it. We talked the past few days about this little area here, the 783, and it wound up filling the gap, which is what some active traders were looking for. I even tweeted, I think, 791-ish, and it went a little bit higher than that. And now you have a bigger downtrend here. So with that said, this was your last gap to the upside that had pent-up momentum. Here was last year's high that it went above, and then it wound up breaking this kind of accelerated trend line right here and this upper flag to get you out of the way if you're a momentum guy. And now it's going to be like whether or not you're a Google fan going into earnings. Okay, if you've been holding Google, for years, and you look at the monthly chart, you've done very well. Here's your new issue. We talked about this being my high beta name of the year last year, because of this nice tight pattern, and it already broke to the upside. And now at this particular point, I think if you're just a trader, I'm just a trader. After earnings, if earnings are good and maybe they do some kind of stock split or something exciting, you try and be a buyer above 815 or above this. Sometimes what I'll do, Brittany, is I'll take a call spread into earnings because either maybe they halted, maybe something. I'm kind of indifferent here too. I think it's not at the dead highs where it's expecting a tremendous report, and it's also come a little bit off the lows. We'll see where we're at, where it's kind of middle ground. So the amount of premium they put in there for these earnings, I just don't think it's worth my time. I'll trade it after hours or maybe a call spread. I'm not that enamored with it, but that's
just you.
I'm looking through my Google glasses that are a little shaded right now.
Nice metaphor, solid metaphor. Also on Thursday, IBM will report, and Bella here says, any thoughts on IBM's chart? A period of consolidation perhaps before a move up?
IBM has been one of the chosen ones. It feels like every other quarter they're missing and they're gapping, and if you're a long-term investor in IBM, you're also fine if you don't over-manage it, over-trade it, and position yourself. If you look here at the chart of IBM, this has been an unbelievable, hold in mega cap land. This was when it broke above 140, a few years back, and since then it's been the chosen one. Broke above this last area too. It still looks really good. IBM has been rewarding stock pickers. At this particular point, I think coming into earnings, you have to really know your time frame and know, last time it had the report here, looked great, gap down, took a little time to stay in the penalty box, which is what it did here. And then people thought maybe, I actually thought the earnings were going to be great, and it gapped up, filled the gap, and now look where it is now. So at this point, it feels like you don't really need to take the risk into earnings. If you're an investor, stay the course, just have some kind of hedge just in case. But I would say trading-wise, if the report's great and and the guidance is okay, here you go. This is your pivot to trade against. But I don't want to sound lethargic here, but I don't really have any motivation to do a call spread or a put spread here. I don't have any kind of conviction here as well.
There's nothing wrong with that.
Yeah, I know Jill loves it. Jill from OP has been banging the table on IBM, and she's been doing well by people. For me, I'm just trading around it here and there.
All right, well, keep the questions coming, guys. We're going to take a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and answering your questions live. And if you follow T3 Live or you follow Scott on Twitter, I'm sure you've seen a little bit of talk about CeeLo Green. So Scott, we actually have a question for you about it from Stone Street Trader asking, can you tell me about this CeeLo thing? How did this come about?
How did this come about? Well, that's a long story. What I will say is a little bit about CeeLo, because I went to Vegas last week and I watched his Liberace show, which was great. And I think the common ground that I tried to have with him is that this guy is busy. Like, he has a routine and he has handlers and he has to fit a lot into a day. I feel like I have to fit a lot into a day. You feel like you have to fit a lot into a day. This guy, is wearing a gazillion different hats. So it's hard to keep up that pace at all times. The same way, I think even for me, I'm up every day 4:45, I'm on a 6 o'clock boat, then I have morning call, and then I gotta do the price point sheet, then I have to trade, and then I have to do, there's so many things that go involved in a day, so I wanted to talk about his routine. I wanted to see, what he has to do in order to keep himself moving, and in order to do so, he had to make a choice to lose weight, because he, you look at him, he's very handsome, and he's very popular and he's very talented, but he might have a few extra lbs that he needs to lose. So what he decided to do is basically say, I'm going to start this journey, which I thought was impressive, because he didn't all of a sudden come out 3 months later and say, hey, look at me, I lost all my weight. He said, this is how much I weigh, and I'm going to start a journey to health, so this way I could feel better, be healthier, maybe be there for his son, and everyone can watch me, and he'll be a good role model for people who who want to lose weight, because child obesity is pretty, it's out there and it's a problem. Why is, Mayor Bloomberg getting sugar, whatever it is. So anyway, he chose easy diets. You should really watch the interview. He's an amazing guy. He's everywhere. I think the Knick game, you saw him singing the Open. He sang the Open for the Super Bowl, and he's just a regular guy. He's loyal. He's got his dogs with him. If there's a little spot in the interview where he talks about, Goody Mob, his old school guys, and I saw him put them up first. He's trying to keep them in the loop. So all in all, great interview. And the bottom line is we all have a formula for our success. And when we do some conferences like we have coming up, in Florida, we talk about that. It's not like one thing that makes you successful. It's a formula, it's a routine, it's something you have to like, it's something you have to do every day, and it takes a long time before you get to where you want to go. And in any different, different profession. It doesn't happen overnight. Like he was saying, he was joking in the interview. He's like, yeah, I'm an overnight success. It's been 17 years of being an overnight success.
Right.
Same way, oh, I'm a great trader. It happened yesterday. I've been trading for 13 years and I don't still consider myself a great trader. I just try and be consistent and try and be honest and keep learning. But anyway, next question. Right there.
That was good, and I think you covered it, but that must have been a fun interview.
It was fun. Okay, I won't tell you that story.
There's more. Make sure you tune in for the video to see more. But let's get to some more questions. We do have one from Mr. Traveler here asking for your thoughts on Apple and Coors.
All right. Apple. Apple has been locked in this downtrend. It's gone further than people would have thought to the downside. But again, when things start to happen, you never know where they're going to go. But there's been many different ways to look at it to stay out of harm's way. And if you look at the chart of Apple, you will see ever since you had the top here at 703, this was one area that it broke. Remember, it broke the 21-day, and we're like, oh, look, first time that Apple broke the 21-day since the last disappointing earnings. So that's when it turned into a trade. We said it'll touch, probably test a 50, which it did. Feeble bounce, broke it. Feeble bounce, broke this trend line, and then let's fast forward to where we are now. Right now you have a small double bottom at 419, which I don't think is very powerful. I know yesterday I tried some long, and then today, I wouldn't say it's the end of the world, but it really didn't have much power. So I think if it gets above short term, if it gets above 437-ish, maybe there's a trade in there before earnings, and then we'll have to wait to earnings. So here's the thing, this is my thoughts on Apple. I think that it's a coin flip on which way it's going to go, whether it'll be up 50 or down 50. But from where it is down here, okay, I'm probably going to do a call spread again. Last call spread I did lost money. I risked 5 to make 20, and it was a 0. But we wound up making decent money on the trade when it's set up to fill that gap. So in my mind, I'm thinking, okay, if they come out with decent numbers and they do a dividend, they do a buyback, maybe a split, and it's up a lot, I'll make good money in the call spread, and I won't be upset that I don't own the stock. If it's disappointing and they lower guidance and they don't come out with anything, this stock could be 380. It could be 370. So I'm not going to take that risk, and what I'll probably do is then look to see if it's priced in, earnings risk will be off the table, and then I'll look to buy the stock against levels and then trade it that way. So I'm going to take a little risk with the call spread with it down here, well off the highs, just in case they come out with something blockbuster, just in case Tim Cook doesn't become Tim Cook and actually listens to the shareholders and does something innovative. And then if he doesn't and it opens in with a 3 handle, then I'll look to see if it's tradable.
All right. What's your overall attitude about Apple now? Because for a while you were just too frustrated with it.
I think there's been trades there, and it hasn't had any commitment, any traction. The psychology around Apple is just very negative because it's a high-priced stock. Okay, so it's not viewed as a fundamental value play yet, but it still makes a lot of money. It has a lot of money that it could distribute, and I just think at this time it's hard to be short here, and trying to be long, it hasn't really worked that much either. I think a lot of traders have broadened out their focus, and I think I've traded like Apple twice in the past 2 weeks. There are some moves here. You go one more time back to the chart here, you'll see, if you remember, this was a nice little trade, right? Above 435. We did a call spread that worked out pretty well. Then there was another little follow-through trade above the 50, but that was it. You have to be very, very disciplined because once it broke this little area here, you got to say that's it for Apple. Some guys saw this topping tail because this was a small little red dog reversal here top after a move, and you probably got short when it took out this low here, and then you made money also. I didn't play it both ways. I just played this way. Now we'll see what happens if it could develop a little bit more. Maybe there's a trade, and then we'll see if there's an earnings strategy. I just think at this point, some of the fluff has obviously been taken out, and I just think that management has to, do something different in order to get a new investor base. Do a stock split. Then it could be perceived cheap. Do some kind of dividend for a yield. Do a buyback. Just they have to do something because they can't just be Apple. They're not the same Apple they were.
I hear you. All right, let's answer the rest of Mr. Traveler's question here. Coors.
Coors. I actually went long today. It was a nice trade. Seems like it's breaking its downtrend. This has been a very nice vehicle for a lot of people who went long after the IPO. It's had a really big move, and lately it's just been digesting. Ever since they shoved that secondary down people's throats, it's been very heavy. Now today it could have changed a little bit. Okay. First of all, this was last quarter's earnings. Okay, it gapped up pretty good. Everyone, said, okay, it doesn't fill the gap, but it's okay. Went out on the highs. Traders are probably like, okay, it's off to the races. Boom. spot secondary, shoved it down people's throats, and it became, very heavy thereafter. So today, you finally saw a break of this downtrend. This was your buyable area right around 56.30. I'm going to give Taylor, who's a newbie on Twitter, props because she sent it my way. You can follow her on Twitter and find her. The more followers she has, the more she'll tweet. Anyway, stopped right here at the 50-day. I think that this changed a little bit. Maybe we see a new direction. If you want to look at it from when it was an IPO, look at the move that it's had. That's why people get excited. When you have a new company, that comes out and it gets applause real quickly, you can make a lot of money. And this one has rewarded macro investors who saw the potential. Now, after a corrective phase, perhaps it gets going again.
All right, let's talk Yahoo. JJ here says, nice run on Yahoo from the 21-day moving average. I missed it. Please advise on next best entry.
You know what? Yahoo has been the gift that's been giving, and it just shows you when things change. The stock's been left for dead. We talked about 1660 as an area to buy it, okay, because of the channel, not because I knew Marissa was coming and I thought she would do a great job. I just said, look at Yahoo. Look at this chart pattern right here, okay, and look at how long it's been going sideways. Okay, so then what happened after earnings? Boom, it triggered above 1660. And then from there, look at this nice move, trending all the way up to where it is at the highs. This was on my 2013 list to be a long that it could hit 24 to 26, and that's where it is. Anyway, like what you just said, every time it seems to be hitting the 21-day, it's been buyable. So, with that said, hard to chase it up here. We've had a few different, tactical buys. I remember listing this one right here and off the charts, worked out well, pulled back to the 21-day, went again, worked out well, pulled back to the 21, worked again. So at this point, after 5 up days, I would not be initiating a new entry. See if it could pull back at some given point and continue. It's already met some of my goals from the monthly chart. I was talking about this area. It's coming into a big area of congestion now. So the void here that I was looking at when we talked about it for 2013 has been filled. And now you have a big time noise area that it's not going to be as easy to move through.
We've talked a lot about gold and its frustrating behavior, and it's difficult to predict behavior and the weakness there. And Stone Street Trader says, do you think gold is just resting after a big decade run and will eventually go a lot higher? Or is the gold bull market over?
That's 2 big questions. I like to take it day by day. And right now, the intermediate trend that we talked about is broken. So if you were someone like me trading it from an intermediate trend, you got out when the GLD broke its symmetrical triangle at 161. So if you look at the chart here, you will see that you go to this pattern and it was very, very tight. This is the last time there was like a tradable setup here, and it was either gonna go to the upside or to the downside. I was actually cheating to the upside, and I wound up losing money, but I stopped myself out. Here is your gap, right? It gapped down, didn't fill the gap, then you had continuation. Okay, and from here, still, locked in this downtrend. But then, so right here, this was one exit. So now you have the macro gold guys who've been holding this thing for a long time, feeling pretty, feeling like they could do no wrong. I remember this very well. If you guys follow me, back in the day, this was that inverted head and shoulders pattern that I came out and said, by the way, guys, we're going to see a move to 1,500. Mark Haynes, God rest his soul. I said, I have a bold call. Anyway, those guys who bought it here, now I think you guys should be sweating a little bit. Here is your macro support, your macro line in the sand. So, it is correcting, and you do have like this channel somewhat. So they're like saying, oh, it's just a corrective phase within a huge bull market. Okay, that's fine. But I think if it starts getting below and closes below 148-ish, that macro bull market could take another discount down to the moving average here at 136. So I'd watch this very carefully with no opinions. It breaks, closes below. Get out of some, maybe even look for another short. This was the last time you had a decision to make, and if you said, oh, I'm fine here, this is another time to take a look.
All right, we only have time for one more question. Let's answer Travel to Paradise here, who says, Red Dog, HIG is on fire. What is good resistance and support levels?
In Fuego.
In Fuego, yes.
My son loves that song. Da, da, da. How's that song go?
I don't know. Why don't you tell us?
I don't sing very well. Fire. Well,
there you go.
A lot of
there
things
you
are on
have
fire.
it, everybody.
So you look at HIG, and it had a really nice move. 4 days up through big resistance. This would have been, I would say, your buy. Opened up, sold down a little bit. Let it catch up. This group is pretty strong. Look at something like even like AIG. Had a really nice move. Some guys were trading this, I know, on my VTF. Broke above, held above, continuing. I think just like a lot of things, it's just having a nice move and trim and trail. Don't chase it, but stay with it because it doesn't give you any signs that it's over yet.
All right, that's it for us today. Thanks for all your questions, guys. Meet us right back here next week for another StockTwits Q&A. Have a great night.